Good morning, everybody. Welcome to the Flow Show. All kicking off again. More politics going on in the world. Can't get enough of it these days. Morning, Mr. K-Man.
Morning, Mr. Ryan. Morning, everybody. Yep, that is the name of current game, politics and geopolitics and what else not.
Yeah, exactly. Never a dull moment at the moment in politics. It really just is. It's overriding a lot of stuff going on in the world these days. Politics. So it's not a good place to be in. But we'll get into what went on a little later in the show. Where shall we start? Start with a bit of data. If I can get rid of my old mugshot there. Services PMI day, final numbers and fresh numbers coming out from a few countries. Start off with China. Their Kaijin services number coming in at 51.5 was expected to rise, went backwards. So that wasn't good news for China. Over in Japan as well, their number improved to 50.5, better than expected, and moving into expansion from the prior 49.7. Over in Aussie land, we've had a bit of data out and not looking too hot overall. Their services PMI came in a little lower than last month, but it was expected to fall into contraction, but it stayed with its nose above water. The Aussie dollar got a bit of a kick in over the GDP numbers that we got overnight. Q3 numbers missed expectations by 2 pips, coming in at 0.3%, quarter on quarter, year on year, missing by 3 pips to 0.8%. However, and I say this even as I'm short Aussie, the Q on Q number was higher than Q2, so it still was a bit of an improvement, just a decent miss of expectations, although year on year it did come down 2 pips, so perhaps not as bad as the numbers suggest, or the price move. That hasn't stopped the market from ramping up RBA cut expectations. We're now fully pricing a cut by April next year. Kate, that Aussie data, I get the feeling that the market was just waiting for an excuse to give dollar a bit of Aussie dollar a bit of a whack.
Yeah, it does seem like it. I've got the impression that quite a few people were perhaps in the same position that I was watching that 64.40 and being long against it. Well, we all got taken to the cleaners on that one. The good thing is that, in my case at least, I was keeping everything relatively small, so it hasn't really hurt much. Yeah, it's perhaps the excuse, but also perhaps the excuse for the market to do something with those Aussie yields, or with the rates. Perhaps the bond market was waiting for a bit of a data or so to try and go sniff out what the RBA may be up to next.
Yeah, no, agree with that one as well. And yeah, there's a lot of people looking at different things. So yeah, we should have to wait and see. It's coming the way I've wanted it to go, put it this way, and that's talk in my book. Let's see if the RBA follow suit and get on board with the market pricing and maybe move closer towards rate cuts. That's half the reason why I've been in me Aussie shorts against the Kiwi, but it's still grinding around. So slowly, catchy monkey, perhaps. Right. Mr. Bailey was out an event for the FT, a pre-recorded message from the FT, and he seemed to wake the quid up. The headline that the FT pumped was that Bailey expects 4 UK rate cuts next year as inflation eases. That gave the quid a little knock. Cable got a little bit of a tap down to where do we get to in the end? Just 126.30. Now they made a bit of a meal at this headline, expecting 4 rate cuts. Within the story itself, Bailey clarified that it's all basically conditional on various forecasts and subject of those forecasts is down to market pricing. Now, several BOE bods, I think including Bailey himself over the last few weeks, have said that they are pretty much on board with what the market is roughly seeing for rates next year, which is about 100 pips of cuts, although there are obviously the outliers like Mann, who thinks that 100 pips is too much, and as Mark in our chat room pointed out, the doves like Dingra probably thinks that 200 pips is not enough. So it was a little bit of a flaky story, maybe a little bit of a headline clickbaity stuff going on from the FT, but cable went and then it recovered anyway. So back to where we started, if anything at all. Over at the ECB's Hawke Holtzman sees the likelihood for a moderate rate cut in December. He also says that 25 pips is conceivable, but nothing more. Says, but nothing has been decided on the next move, on the next rate move. It will depend on data available at the December meeting. ECB's Wren again out saying he sees more grounds for a December interest rate cut. Current data means ECB won't return to zero rates, or it's not likely they'll return to zero rates. I've stuck that one in my save folder for when they return to zero rates. ECB's Wojcik says a DEC rate decision won't be difficult. So doesn't say what he's going to do, but that has just literally popped up on the Newswires. He says a meeting by meeting approach still appropriate. ECB officials broadly agree on rates. So I'm going to take that till he means there's a cut coming. Bundesbank head Nagel is getting a little bit panicky now. He's calling for a softer debt break in Germany to ramp up investment. Says the economy faces a weak outlook. How about that for an understatement? If you want to know what's going on in the world of trading, apparently Bloomberg have got your back covered. Apparently hedge funds have decided to their currency of choice is euro yen, and they've decided to get in on the short side. Bloomberg noting options data from the DTCC, which is where the option expiries that I pull out every day come from. There's been a marked pickup in downside options being traded there. So hedge funds thinking that euro yen is heading much lower. Kay, that sort of adds up when you consider the move we've seen in euro yen being a little bit more volatile than some of the others.
Yeah, I'd say it's not surprising, and but then again, making a story about some people taking punts in options is always first of all easy after the fact. They've probably already been doing that for several weeks. If you look at the price action and in my opinion, because most of the time those things come out when they're already well underway, at least. Yeah, it's somewhere logic. You see how the eurozone is going, and then you have the speculation about the Bank of Japan doing more rate hikes. So I guess that is for sure a currency pair of choice to put some eggs in. Now we always have to note and know the exact details of it, because also if you're playing options, don't forget that if they just buy pure vanilla downside, the only risk is their premium, and it's not as if euro yen is going to ramp higher, that everybody is going to go bankrupt either. But it all depends on what they did. They may even do like put spreads and stuff like of the likes. I mean, we never know what they do exactly. I mean, hedge funds will be hedge funds.
Yeah, absolutely. Right, moving on to the good old US of A. We didn't get much out yesterday, but we did get a little bit of data from the JOLTS numbers. Nothing really of note there. A little bit stronger, coming in at 7.744 million. Some of the underlying details like quits, separations, hires, and that sort of thing Little change there. Overall, it's still in soft landing mode there. Jolts calming down a little bit. Now, this data is lagging what data we're going to be getting this week, like NFPs and ADP by a month. So this is October data, but this is jobs openings. So not necessarily affected a huge amount by the weather and whatnot, but holding steady as she goes is the main take from that one. We did get updated sales figures for Cyber Monday, which has now become the biggest sales event of the year for the US, and consumers spent a bit more than was expected. 13.3 billion, up 7.3%. Initial expectations were 13.2 billion, so up a bit. And this is just online spend. Adobe expect the full holiday season online sales in the US, that's between November the 1st and the end of December, to hit 240.8 billion, which would be up 8.4% over last year. So still a big spend. I don't know if any of that's been adjusted for inflation or whatnot. So whether that number's bigger because people are paying more for the same amount or what, but spending is still spending, and it's better going up than going down when you're judging an economy. Fed's Daily says a rate cut in December is absolutely not off the table. Speaking about people who are thinking they may go for a pause, the timing of a cut is up for debate, but we need to keep moving the policy rate down. It says the neutral rate is closer to 3%, and we can take our time getting to neutral. It's a bit of a few Fed heads just working to put numbers on where they see neutral at the moment. Fed's Kugler is going to take her decisions meeting by meeting. It says Friday's jobs report may well bounce back given the influence of storms and strikes on the previous report. Fed's Goolsbeast says over next year rates are expected to come down a fair amount from their current level. He's been banging that drum for a while. He says he's watching housing inflation most closely. Right, so the kickoff that we woke us up yesterday afternoon was the South Korean president putting the country into martial law. That hit the wires, saw yen pairs getting hit. So a little bit of a rise in gold, pretty much came out of the blue. We've gone through the whole cycle with that. He then lifted the martial law after Parliament voted to block it. That's when they managed to get in, because it got blockaded by buses and lorries and all sorts of stuff, military involved, and they got pulled out. From now, the opposition party is looking to impeach the president for treason. And it's all kicking off outside as well, because the main Labour union over there is calling for a general strike, demanding President Yoon's resignation. The South Korean regulator is ready to go to work and deploy 10 trillion won in their stock market stabilisation fund at any time, just to stop markets from flipping out too far. I don't know where we're at the moment, but it seems to be calmed down. Bit of a speedy episode, that, Kay. 0 to 60 in 2 seconds.
Yeah, we went from a general coup into that was only the coffee going down into the wrong pipe. Yeah, I don't know what to think about it, to be honest, Ryan. It's just something where we are spectators. It is, though, a fact that if you look, because behind every big or small event, we monitor what the market does, and one of the things that happened was that risk got a bit of a hit. As you say, gold went higher. Dollar yen actually went down, which is kind of logic because it is a pretty big partner of Japan, and so the risk picture and the pressure of risk was such that dollar yen went to do the lows when the thing hit the wire. So that is something that the market can take a lesson from about what happens when something is happening in a certain part of the world. In this case, especially in Asia, right? And the thing is as well, I think the market got a bit sorry nervous because of the proximity of North Korea, China, and everything, and that part of the world is very risky at the moment. So you don't really want anything happening politically to one of the countries which is supposed to be kind of a stabilizer.
Yeah, exactly. And I've read a few bits and pieces on it. Yesterday, I did a bit of digging. Apparently, this whole thing kicked off in large part because he wanted to pass a budget. So it's a bit like the France situation, but went a bit more volatile than what we've seen in France with Barnier, at least. But again, looking back, they've got a history, the South Koreans, of going through these sort of messes. Someone did a timeline of all the presidents who have been impeached, removed, and whatever over the last sort of 20, 30 years or so. So it's not the first time, but just market got a little bit of a wake up on that one anyway. Right, speaking of France, Macron has ruled out again resigning before his mandate finishes in 2027. And then he went on to poke the beehive with a stick, says he doesn't believe Le Pen will join the left to vote to topple the government. That's not what she said yesterday. She will vote against the government, whatever happens, whoever pushes forward this no confidence vote today. He also said many socialists won't vote to topple the government. This is the Macron who put up France for a general election earlier this year and then got taken to the cleaners. So I wouldn't take what he expects with too much. Well, take that with a pinch of salt, bag of salt, if you like. German Foreign Minister Baerbock says we do not rule out the participation of German soldiers in a peacekeeping mission between Russia and Ukraine. Kay, I wanted to ask you about this as well. We're just getting a few little headlines coming out that maybe Ukraine, Russia is just maybe looking at talking. I'm not going to say ending it, but looking at talking, or they're more open to talking.
Wouldn't that be a bummer for Trump that they get around the table before before he takes the seat? I mean, that's half of that's half of his geopolitical stuff down the pan if they would succeed. And obviously, for the peace in the world, everybody would love them to find some kind of arrangement, especially for those directly impacted by wars across the globe. Yes, we have mentioned it. There seems to be, I think, the threat of nuclear is, and rightfully so, scaring Zelensky as well. He's thinking about his people. There, there, there may be some things coming or them via I don't know who going to sit around a wobbly table, but it all really depends because Zelensky said he wants some parts back. That's going to be over Putin's dead body, I think. Will they find some kind of agreement? The fact that Zelensky mentioned NATO is probably going to be an absolute no-go for the Russians. So yeah, I don't know whether we are very close to them sitting around the table, but the fact that somebody wants to talk is perhaps an embryonical sign that there may be some things happening probably somewhere in 2025.
Yeah. Well, let's hope so anyway. But yeah, maybe we should just be prepared that we're going to get a headline out of the blue somewhere else. Well, let's hope so. It'd be a good headline to get. Right, Kate. Anything else for anything else?
Yeah, you mentioned the story there about some officials in Japan earlier in our chat room who want to probably go a bit slower. And I think it's all has to do with not letting the market get away with one like it did in August, and put perhaps the government finances under pressure. As we know, Bank of Japan is probably one of the least independent central banks around the G7 at least, or the G10, and that had a pretty good impact on the yen. A lot of people seemingly liking, and in our room as well. Well done to those who were riding it, taking profits down in those 149s, 148. So that's really nice from those who played it. But this is telling us that whatever you do in the end, whatever direction it takes in the end, you can reverse it. It can reverse on a dime,
Yeah.
especially when we see like six, seven, eight big figures down. We've got a two big figure snapback in the space of a few hours. So I mean, this is also something that traders need to keep in mind. Don't get married for too long to positions, especially when they are riding in your favor. Do take profits, especially in stuff that is moving a bit fast, such as the yen right now.
Yeah, absolutely. Mike said it was a gift for dollar yen longs to buy more lower. Yeah, I managed to buy it lower, Mike, at 88, and then I managed to scratch the whole thing after I moved my stop up to cover what I made at my stop at 148.60. I think we got to 64, but then I moved it up and scratched the trade. So yeah, not the best thing I can see this morning when it's shooting higher, but nevertheless, market's going to market. We are banging on the level at the moment, as you can see there on the chart, 150.80, which was being a bit of a level previously. As you can see around here, we've had plenty of traffic around that area. Go back quite some way to where this 150.80 has played ball. We're up here again, decent move up. A few people, Kay, thinking they would have loved to sell 152 on another test. We might be getting one. And
Yeah, I
then
think I think there's going to be people queuing up there to sell it at 152, or those who were brave. Well, especially those who took profits in the low ones. They are feeling brave, I think, enough to start selling again at 152. It is possible to get there, as we've seen those kind of Bank of Japan expectations, JGB yields a tad off, US yields a tad higher, yields across the board elsewhere. Actually, well, especially on each side of the Atlantic, are trading a bit higher. So that's all helping the recovery of the dollar yen and the yen crosses. But yeah, I think ahead of the Bank of Japan potentially, or in response to other central banks, we may find sellers and perhaps start to form a little bit of a range there.
yeah, and obviously we're getting into the jobs orbit for the US. We've got ADP
Oh yeah,
today.
that as well.
So yeah, in
ISM.
ISM. So it's all going to be about the dollar side of things. But staying on the yield front, and I thought this might be going again yesterday. We had a third look under that 720 level, and that was helping. Well, there's a bit of the South Korean stuff going on there, a bit of a flight to safety as we've seen, but it hasn't managed to stay below once again, and we're back above and pushing up. So that's giving dollar yen an extra tailwind to that as well. I'm just going to go back or go to Ali's comment. Ali looking to play the gold range. You have to remember back to yesterday, we were speaking about, or I was speaking about this, and Kay's been speaking about this too, this range, 26.20, 26.60. I've got it around about 70. So we were already saying yesterday what our thoughts are for gold. So I'm going to ask you the question. What are you going to do at 26.20, 26.60? Are you going to play the range, or are you going to go with a break? I'm going to leave that question with you, mate. But I'll just throw it up quickly. If I can find it, where we're going, it's up here somewhere. There we go. So we did have a little bit of a move on that South Korean stuff, but nothing huge. Every time I look at it now, it's trading 26.40 something. But yeah, there's the range. So it's up to you what you want to do with it, mate. We pointed it out yesterday. Nothing's really changed today. Mike, you want to have a look at the Aussies? Let's have a quick look at the Aussies, the Antipodeans. Aussie dollar. So this 64.40 is now looking quite broken. We have had a little poke above it. Let's come into a little bit of a shorter time frame. We have had a couple of little pokes above it, but it's now started to hold below. So this could be a signal. If you weren't short, if you want to be short, then holding this level now is your trigger to do that. We're testing down near the big figure 64, but taking this on to a bit of a longer range. We got this big figure stuff going on, but my next level is down here 63, 50, 60, a level that's been pretty solid, and we've had plenty of tries down there. We have had breaks. We've had breaks that have held. They haven't lasted overly long, but I wouldn't rule out a move down to that sort of level if we're going to hold this break under 64.40. But perhaps the market may be getting a little bit too dovish on the RBA. Based on those numbers overnight. It wouldn't be the first time market gets too extreme. And again, I say that even as that helps my position. So I'm going to be objective. I'm always try to be objective about my positions, even if the market's moving my way. Aussie Kiwi, as you guys and girls know, I'm trying to milk this one. Again, it was poking its nose up above this level. I wanted it to hold below yesterday, but it wasn't. But then the Aussie data and the market put pay to that. It can be a significant move. I was saying this 109.80, 90 area is potentially where we might stall. The fact we made a few pips lower is or can be quite significant because it just shows the momentum is still going. If you hold a low, then that tells you something's going on. Now, obviously, this is retail spread, so it's a little bit different, but the picture is looking weaker from here, but I'm still not expecting any sort of crap out. It's probably going to be a bit of a grind. 110 already shown as resistance there, so that's going to be the next marker if we get a rally from here. But if we do hold around here, then we could well get a push up back above that 110 area. Otherwise, I'm going to look, if it keeps going, to take a bit off my short if we get down to this level, this 109.50 level, maybe even against that low down there in the 60s, just to put some in the bank. Kiwi dollar, where is that on my chart? Where have you gone missing? Right
I can take that one if you want.
Sorry, mate?
I can take that one if you want.
Yeah, okay. I was just going to have a quick look, see what's going on. This is ones that... A lot of these are doing the same sort of thing, Kate. I mean, this is like a mirror image of euro dollar at the moment. We've got this big area, this big zone, can't get through it, can't hold below it. And you can see how long we've tried to have a go down here. So this is still your key area, is 58.40. Get a hold under there, then you may be heading back towards those lows, 58s. But if you can't, then it's going to keep things a little bit more sticky for that. Euro sterling, that got a bit of a jumper on those Bailey comments. The market taking that a bit dovish, had a little knock up to the figure. I nearly got stopped on my shorts actually yesterday on this move higher, but unfortunately I've stayed in. I've actually removed my stop. I was at a stop in 83.15. Because I'm short just below the figure, and I've pulled that out just in case we get a bit more of a rally. I might add to the position rather than stick on what we got, but we still can't get through this number here, 82.76, and this really is a bit of a gateway. Now, the thing you've got to remember, when you get these levels and when you get these little ranges playing, the more times it holds, then the bigger the break is likely to be. So I don't mind too much that we keep holding this level because I'm still happy with the direction, but it's going to take something to break it. But if it breaks after trying so often, then it could be a quick trip lower, and that would be at least, I would think, the low 82s, if not the figure itself, and that's another big old level we've got down there, 82. around there, around the figure lows. It goes all the way back and back and back and back and back. And the same thing's happening with euro dollar as well. Messing around, we got up again to this top of this zone, couldn't get through. Then we had a little move under. So we got this range in play: 106, 104, 104.50, wherever you want to park the bus. The more times you trade it, then something's going to give eventually. We can't stay doing this for the next year. Okay, so when it breaks, you're going to know that it's going to be a bit of a mover. So if you're trading the range, that's absolutely fine, but just be mindful if it breaks. Don't think, oh, yeah, if it goes through 20 pips, I'm going to keep shorting it. If it's gone 40 pips, I'm going to keep shorting it. If you get a break after testing levels so many times, then those breaks tend to have some legs and it's going to kick on. So just be careful of that one. Right, Kate, over to you, mate.
Is there anything else to look at?
Yeah, there's plenty to look at. There's always plenty to look at. Hang on, I can't even find my button. There we go.
Okay, then. One thing I'm looking at here is in the cable. This one here. There's a couple of things to look at here. There's either you look at we're looking at a bit of a wedge, and we tagged the underline of it and bounced again in the cable. Although it's not a massive bounce, we really are going to need to get back above 127 to get out of trouble, or we may see the start of a bit of an inverted head and shoulder. Perhaps. I mean, these are not stuff that I'm really a specialist in, nor really trading much of it. But it is an interesting hold in this cable. Overall, though, I'm still okay to let. I'm like really smalls long, and I've been trading them around, as people know, in the room. So I'm not really much, not really too much in danger on anything of it. But and I've also said in the room that I'm okay to actually let and monitor it down to 125 in the more medium term, okay? And that is more or less what I'm going, unless there's of course like monster numbers coming out for the rest of the week out of the US. And we are there in a flash. But I think this is going to be a very interesting zone again around the 125, and I don't see too much of a reason now. If you look at both sides of the pair, for the sterling to collapse much further than there, also thinking about the year end. Yeah, you were asking about the Kiwi, but Ryan already showed it, Ali. Okay, so I don't have really a lot of different stuff there to show. Just that we are relatively close to support levels here, but that's more horizontal support than anything else. Yeah, picked up tinies there, but it does look to me like the Kiwi has more collapsed with the in sympathy with the Aussie than anything else. Not sure that it is justified that the Kiwi gets sold just because of what the overnight did much more. Yeah, usual. And there is, where's the risk? Where's the risk? Sterling yen and euro yen there is. You're not in gold anymore. I was going to have a quick look at it again. Yesterday, there's a bit of a trend line developing here, and yesterday on the Korean stuff, we went to test it around 26.55, but then we just stalled, and it's getting very sideways now. Okay, it's going to have to break above this zone here to continue to go. I've got like really smalls again, not a full position by any means. Thinking that we are perhaps building a bit or trying to build a bit of a base around here to then continue higher, but for the time being, indeed, very rangy. Euro yen. Euro yen, let's have a quick look at it. Euro yen is trading weak, right? But then we've seen this 200 pip rally in the dollar yen, and look where we went down to in the euro yen. So it could be that we are here forming a bit of a perhaps a bit of a channel or a range starting to form here, but it's not very clear to me, at least, what's going to happen next, because we can hardly say that the euro is strong right now, and the yen is still not weak because it's stronger than last week, for instance. But it is also very possible that we are just going to start building a bit of a range here. I thought this level here in the mid 150, so around 155.5 is going to be the next really interesting one on the flip side of things there is. Sterling yen, again, I have not been trading that at all, but look what happened in the last session. We went back up to 191, and where we are still around now. It's a bit of a trend line here, and I need to adjust that just a little bit, it seems. Yeah, we're actually trying to break back above. It is one of those, because of my feeling about or the feeling or my hunch or something about the sterling, that I'm not too bearish on the sterling right now. So this is not really one that I want to play from the short side. And it could be that it's relatively significant if we are back above this 190, 191 for the next couple of sessions, okay, and gradually move back a bit higher. But yeah, I mean, we've broken below, stayed below for a couple of sessions. Now we're trying to get back above that trend line. What's your close? 190.80 up to 191, the figure today, the range. That's what I would say on the sterling yen. Especially, I would say watch all the yen crosses when we get, if first of all, if we get back in the dollar yen up to that 152 zone, because there's probably going to be quite a bit going on in the dollar yen there, anywhere between 150, 190, 152.20, because there's a bit of a broken trend line there as well. That's going to be an interesting level to watch. Just going back on your dollar Swiss, Ali, it's I went out back in. It's still there. Nothing's changing, right? I mean, it's just 89, 88, figure 20, 89. That's the only thing that really matters, which is something that is um, keeping the Swiss under pressure is a big word, but keeping it from strengthening, I would say, is the expectations for the S&P. All right, the 12th we have the S&P, so that is something that is probably going to be pretty decisive for the Swiss franc going into the year end. All right, so I think we need to be a bit patient with the Swiss. In the meantime, just trade that level, 88, 89, and yep, 89 here. And if it breaks 89, we're probably going to run up to 89.5, and that's it. Keeping it very, very simple. And am I doing anything else at all? No, no, the rest is relatively quiet. Back over to you, Ryan. Thanks, mate.
Thank you very much, mate. Lovely stuff as always. Yeah, well, let's have an early one today. Finish nice and quickly. So keep you entertained. ADP coming up later. We'll be following that live on Face. So join us for that one later on, and we'll talk you through that one if we can get a word in edgeways with Dale and Blake talking about well, God knows what. Joking, of course. Anyway, have a good day, everybody. We'll see you all bright and breezy tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.